Welcome everyone to this presentation on Endeavour Silver Corp. I'm Bradford Cooke, the founder and CEO, and today's presentation is entitled Profitable Production, Compelling Growth. I will be making some forward-looking statements today, so you are duly cautioned. And some quickie investor highlights. Endeavour Silver is a mid-tier producer. We own and operate 3 high-grade underground silver gold mines in Mexico. And the main catalyst to create value both short and long term are as follows. For the last 2 years, we've been focused on optimizing our operations, reducing our operating costs, and boosting our free cash flow. We're one of the very few producers in the silver space to have several consecutive quarters of falling costs. Perhaps we're best known for our organic growth profile, one of the best in the entire silver sector, with not 1 but 2 new discoveries awaiting development. Thirdly, we're very good at discovering new ore bodies. Suffice to say that every ore body we've developed, every mine we put into production was on the basis of success of our exploration team. And we continue every year to make virgin discoveries and expand our resources. Last but not least, from time to time, we do acquire key assets. Each of our core assets were purchased typically for pennies on the dollar during the bear market. And we invest the time and money and expertise needed to turn them around and expand them. So we're an opportunistic silver and gold-based producer, and we have, I think, the best leverage of our share price to the silver price in the entire sector. Our core assets are basically located in Mexico, head office in Vancouver, exploration projects in the north part of Chile. Some recent highlights. Q4 of last year was our strongest quarterly production in 2 years, with approximately 2.1 million ounces of silver equivalent production, up 21% compared to the year prior. And we achieved our 2020 production guidance, notwithstanding a 2-month government-mandated suspension of operations in Mexico due to the COVID pandemic. So we did produce 6.5 million ounces of silver equivalents last year. I should point out that we're only a silver and gold producer, and last year's production by revenue was approximately 50% silver and 50% gold. More recently, we agreed to sell what was a 4th mine of ours, the Cubo mine, to another company, Van Gold, for $15 million in cash and share payments, plus some additional payments. We expect to close the sale of that Cubo asset, which is currently non-producing and in care and maintenance mode, towards the end of the first quarter here in 2021. Year on year, we significantly improved our financial performance. Our Q3 cash cost was down 68% to $3.69 per ounce of silver produced, and the all-in sustaining cost was down 19% to $17.50 net of the gold credits. Our Q3 operating cash flow jumped 400% to $10.3 million, and our Q3 cash position climbed to $45 million, working cap at $54 million. I can say that we should be releasing here in January our year-end guidance and outlook for the year, and we had a great 4th quarter in terms of cash generation as well. We continued in the 4th quarter last year to drill more high-grade mineralization around our 2 main mines, Guanacevi and Bolanitos, as well as our 3rd and much smaller mine, the Compas mine. And last but not least, we expanded the land position at our main growth project, the Terronera project in Jalisco State, to about 20,000 hectares. That's 45,000 acres, and acquired multiple concessions with known mineralized vein structures. So let's have a quick tour of the core assets. Our first and largest silver mine, the Guanacevi mine in Durango State, Mexico, was acquired in 2004, and we brought it to production in January of 2005. We've now recorded 16 years of production at Guanacevi. It's the only mine where we actually produce doré bars and pay to have them refined into pure bullion. That gives us the flexibility to sell or not sell our product on a weekly basis. So Guanacevi was the subject of a major operational turnaround in the last 2 years. It was guilty of actually causing the company to take losses in 2017 and 2018. And that, as a result, we spent most of 2019 and 2020 fixing the mine up and expanding it again. You can see viscerally how we did with the grade of ore to the plant over the last 4 quarters, climbing from 312 grams of silver equivalents per ton to 412 grams. So it's now back to its high-grade history. And after bottoming at only 684 tons per day in the second quarter due to the suspension of mining operations related to COVID, we've been able to take the operation back up very close to the plant capacity of 1,200 tons per day in the fourth quarter. So we succeeded in reducing our cash costs, increasing our employee productivity, and significant improvement of our work culture. All of that adds up to climbing silver equivalent production. So in the fourth quarter, we continued to outperform at Guanacevi, and the charts to the right, you can see the cash costs have fallen down to the $8-9 range. Our product mix at Guanacevi is dominantly silver, 80% silver, 20% gold. Moving now to our second asset, Bolanitos was acquired in 2007. It's in the famous state of Guanajuato. And at Bolanitos, we don't produce bars, we produce very rich gold-silver concentrates for sale to smelters. We also launched an operational turnaround at Bolanitos about 5 quarters ago for very much the same reasons as Guanacevi. The mine, after being profitable for many, many years, it was our most profitable mine for over a decade. In fact, from 2009 to 2018, we pulled over $200 million of free cash flow out of Bolanitos. But it lost money in 2019, so we felt we had to roll up our sleeves and get it back on track in 2020. And again, you can see the chart left is just the grades to the plant, and they've been rising nicely. The chart right is our production, and you can see it's also come off bottom and is now rising on a quarterly basis. So the operational turnaround at Bolanitos is now complete, and we're feeding the plant to its plant capacity. How does that impact our costs? Well, you can see here again viscerally quarter-on-quarter improvements in our cash costs from positive to negative. Negative meaning that the gold that we produce is worth more than the cost to run the mine, and the silver is effectively free. Last but not least, we put into production 2 years ago our third and smallest but most gold-rich mine, the El Compas mine in the famous district of Zacatecas. And El Compas is basically a small, steady-state operation. Year on year, the production's up 9%, throughput's up 3%. Gold grades and recoveries are up, but silver grades and recoveries are down. So on balance, it's just chugging along. It's a little bit volatile because it's a small mine. It's typical of a small mine, but it's generating free cash flow and doing what it's supposed to do. And on the chart right, you can see that the cash costs, again, fairly volatile from a low of almost $100 per ounce of silver produced to a high of $22. That's because the gold credit is worth far more than the silver we produce there. So we're reporting it net of the gold credit to be consistent with our other mines. So those are the 3 operating mines, and catalyst number 1, operational turnaround to reduce our costs and boost our free cash flow, mission accomplished. Secondly, in our list of catalysts is our growth profile. And up first is our Terronera project in Jalisco State, Mexico. Terronera is truly our next core asset. It's a large, low-cost mine potential. And when it's up and running, it will effectively double our production and half our costs. It's a district-scale opportunity spanning 45,000 acres. And there's over 50 old mines that we've now mapped and sampled on the property, all the different mineralized vein systems shown in the red lines. We've made 2 bona fide discoveries, the Terronera discovery, which is the bulk of our reserves, and the La Luz discovery, which is much smaller but higher grade. And we're now forecasting to bring Terronera online at about 6 million ounces of silver equivalents per year for a 10-year mine life off of about an 80 million ounce silver equivalent reserve and resource. We have published the final pre-feasibility study last summer, very robust economics, generating a $137 million net present value after tax, and that's based on $16 silver and $1,400 gold. We'll show you what it looks like at higher prices here in the next couple of slides. But even at those metal prices, this project should generate an internal rate of return on capital invested of 30%, with a payback period on capital of 2.7 years. What's really special about this project is that it's also a silver gold mine, about 2/3 silver, 1/3 gold. But again, the gold on a cash cost basis pays for the entire operation, and the silver is effectively free, even on an all-in sustaining cost basis. So including a life of mine, capital investments, life of mine exploration investments, all of the operating costs, taxes, royalties, head office, general and administrative costs. Even after all of that, this mine should generate silver at $2 an ounce. So a pretty special project, and our exploration team found it. We're proposing now to build it. So here's a comparison of the pre-feasibility study base case metal prices, the spot case metal prices, and current prices. You can see the impact of the current prices. My goodness, the net present value almost triples to $350 million. The internal rate of return doubles to 65%. The payback period more than halves to 1.1 year. And the annual average after-tax free cash flow is $57 million. So this is a very special project, and it's a real game changer for Endeavour Silver. Chart left is just the life of mine production of silver and gold in the silver and gold bars, and the ore grades going to the plant, starting off almost 500 grams per ton, and even at the end of the mine life, 350 grams per ton. My goodness, that's in the upper echelons of the entire silver sector. So it's a very high-grade opportunity, and that explains why it's so low cost. So there are still significant opportunities to optimize this project through our feasibility study. We launched the feasibility study last September, and it's due in July of this year. We've already expanded the property size, so the footprint is now covering, like I said, 45,000 acres. Drilling is now underway. After a 2-year break in drilling, we restarted the drilling last September to test many of the other veins that have never been drilled. And our goal, obviously, is to expand the reserve and resource base. Because of that, if we're successful, we're also evaluating the potential to expand the plant capacity up to 2,000 tons per day if we're successful. We're continuing to try and optimize the mining methods with more geotechnical analysis. We think cheaper long-hole mining should be possible. We're optimizing the ore transport, currently evaluating truck haulage and ventilation requirements. The mining equipment, we've modeled diesel equipment, but we're now taking a look at electric equipment to make it a little greener project. On the recoveries, we're continuing to evaluate mass pull and concentrate grade, comparing grind size versus flotation recoveries. On the tailings transport, that is taking the spent, crushed and ground up ore. Once we've removed the gold and silver, it has to go somewhere, so we're evaluating how to get it into the tailings storage facility, whether it's by haul trucks or by a conveyor belt. And last but not least, we're going to go a little bit green on our power. We're looking at some solar power to power the office and campsite, and we're also looking at compressed natural gas for the main power source for the mine and the plant. So next steps at Terra, we want to complete the engineering, procurement, construction management process and hire a main contractor because we are anticipating a project development decision after the feasibility study is delivered this year, and we'd like to break ground this year. In fact, here in Q2, we're already ordering long lead time equipment so that we're not stuck getting equipment on site. We're continuing to build out our project team. We have both a director of project development as well as a project manager. And as I mentioned, the exploration drilling is underway. We've had to extend some government permits successfully. We're ordering these long lead items. And we're looking forward to a very positive summer of receipt of the feasibility study, going to the board for approval, and securing our project financing. Last but not least, and second in the project lineup for development, is our Corral Project in Chihuahua. I won't say a lot about this. It's intended to be an exploration project until Terronera is actually up and running, which is from today, it's a more than 2-year process. So we'll be aggressively drilling Corral to expand the resources there this year. It currently reports over 40 million ounces of combined resource. We think we can get that to 60 or higher, and that would then turn it into a core asset. There's 4 historic mines at Corral: Veta Colorada, San Patricio, Palmilla, and Cometa. Veta Colorado is by far the biggest, and we can actually drive our pickup trucks right down into the old Veta Colorado mine and put our hands on ore. So it's a great place to restart an old mine. This is a mine that produced 4 million ounces per year up until 1990. It only closed because of the low silver prices, and it basically sat dormant for decades until we purchased it for $6 million in 2016. And then last but not least, we've been very active as an exploration group in making fantastic high-grade discoveries in Mexico, but we quietly built a portfolio of world-class bulk tonnage targets in northern Chile. And you can see from this photo montage that the alteration zones that we literally staked are massive, world scale. So the upper photo is a shot of the project we're currently drilling right now. It's a high sulfidation epithermal gold silver target called Paloma, and the alteration zone measures 3 kilometers long. Lower left, where you see the rider on the horse, is our 6 by 8 kilometer scale porphyry copper system, and we're currently partnering that out because we're not a copper company. And then off in the upper right with the alpaca is our third project. It's not quite ready for drilling yet. We're still permitting the AIDA project, but it's an 8 kilometer long bulk tonnage silver target up near the border with Argentina and Bolivia. So 3 world-class exploration targets in Chile. Why are we in Chile? Because even though we've been really successful at finding small high-grade mines in Mexico, there's a limit to how much of that we can do. And so our attempts to make a world-class discovery in Chile are really to try and ensure the company decades of future rather than years of future. Cerro Marquez, bulk tonnage porphyry copper project. We're looking for a copper company to partner that one. Paloma, high sulfidation epithermal gold project with silver byproduct. We're currently drilling that one. And AIDA, which is a bulk tonnage extension of the Bolivian silver belt effectively into northern Chile. And we're waiting for the drill permits to drill that one later this year. So all of that adds up to a sector-leading organic growth strategy. We've got tremendous cash flow leverage thanks to falling costs at our 3 mines. We've got tremendous growth leverage thanks to not 1 but 2 new discoveries awaiting development. I forgot to mention that Terronera is actually already permitted. So we're actually really just waiting for the feasibility study, and then we can push ahead. And last but not least, the spectacular leverage to world-class discoveries in Chile. So Endeavour currently has 157 million shares outstanding. The share price is hovering around the $4.50 to $5 range. That gives us around a $750 to $800 million market cap. Very good daily liquidity, up to 5 million shares per day. We're listed on the big board on New York, EXK, the big board in Toronto, EDR, and over the counter in Europe. Working capital at the end of September was 54 million. Cash was 45 million, no long-term debt. We do have one significant shareholder, the VanEck GDXJ Index Fund, holds over 5%, and we have one strategic shareholder with a 2% toehold, the world's largest silver mining company, Fresnillo. 10 analysts cover the stock, and we have a sector-leading beta of our share price to the silver price. So again, coming back to our catalysts, we're continuing to improve our productivity and reduce our costs as we finish off these operational turnarounds at Guanacevi and Bolanitos. We're now optimizing Terronera through a final feasibility study so we can make a production decision this year and break ground. We're continuing exploration, drilling around each of the mine sites to replace our reserves and grow our resources. And of course, in Chile, we're going after a big one. So why invest in Endeavour? Well, what you get with Endeavour Silver is a mid-tier silver producer who simply through the development of its own organic growth pipeline of development projects intends to become the next senior producer of silver on the planet. We're led by an experienced management team. We've been together for years. I'm the founder of the company with basically a shell company and no assets in 2003. We run a strong balance sheet with no long-term debt, and we're a pure silver gold player. So thank you very much, and why don't we open this up for questions?
Thank you, Brad. I'm Mark Reichman, the Senior Research Analyst who covers the metals and mining sector for Noble Capital Markets. I'd like to remind our viewers, if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So the first question is when do you expect Terronera to go into production and how will it be financed?
Good question, Mark. And basically, Terronera, subject to a positive feasibility study in July, will go to the board in August and break ground in September. It's approximately an 18-month construction schedule. Call it 2 years to be comfortable, so 2023 would be our startup of production.
And the next question is, how do you expect to balance acquired growth versus organic growth opportunities?
We've been very good at the organic growth side, but a lot of our organic growth came from acquiring fully built and permitted assets that had never been properly explored. So that describes Guanacevi, Bolanitos, and Compas. Obviously, Terronera and Corral are a bit different because we're not buying fully built and permitted infrastructure. We are, however, buying historic mining districts that have never been properly explored. So we're still leveraging our exploration expertise into new discoveries and new mines. And the balance is that as we grow, we continue to scour the Americas, basically North, Central, and South America for new opportunities. And we hope we can pull the trigger on one this year. So on the M&A side, we're opportunistic. On the organic growth side, we just plug away every year.
So on the acquired growth side, I mean, what is your criteria?
Well, that's a good point. We'll take basically silver with anything. We don't mind base metals. We just, through circumstance, ended up with strictly gold and silver projects. And so silver plus gold, silver plus copper, silver plus lead zinc, we don't mind any of that. Our jurisdictions of choice are in the Americas, primarily Mexico, obviously, Chile, Canada, and the US we're quite happy with. Selective projects in places like Panama or Colombia. There are some no-go zones, Argentina, Bolivia, Ecuador, Venezuela, Guatemala.
Well, are there any additional productivity improvements available at Guanacevi and Bolanitos?
Well, now that we've got those two mines up close to the plant capacities, I think from here on it's just managing our grades a little bit better, our dilution a little bit better. Guanacevi, we're very lucky. We have two new ore bodies that are very high grades. So really we just want to maintain those grades to the plant. At Bolanitos, it takes a lot more effort at Bolanitos because the veins tend to be narrower and lower grade. And so dilution is of paramount importance in our operations at Bolanitos. But we've been very successful at continuing to find extensions of old veins and even new blind veins at Bolanitos. So that combination of continuing to explore and managing our dilution is really the formula for productivity going forward.
And what are your plans to mitigate El Compas's short mine life?
Aggressive drilling, and we had some success last year. We're currently assessing the capital needed to put some of the veins on the Calicanto property adjacent to our plant into production. And we hope to have that study out here in the first quarter. So we did have some success. We're evaluating it now, and that should actually give us some life extension.
The next question is what are your goals for driving all-in sustaining costs even lower, and how do you get there?
Right now we're running above average sustaining capital at the three mines, and that's the one factor that I think can fall over time. Sustaining capital meaning the amount of money to drive new tunnels to access ore body extensions. And we went through a bit of a lull in our capital investing in the final years of the bear market. We're still playing catch up on our capital investment, primarily underground mine development. We did, during that operational turnaround in 2019, 2020, already invest in significant new mining equipment. We upgraded actually our site management teams, and we adjusted our mining methods. So we've done a significant amount of the catch up on capital investing, and we're probably in the final year of catch up here in 2021.
And then looking at it, 2021, what are your capital expenditure needs, and how are you situated, financially to fund those needs?
Well, without giving anything away on our year-end financials, we did see a significant jump in our cash and treasury by year-end, thanks to a very profitable fourth quarter. So we're in a very good position cash-wise. And we typically budget our capital investments out of our cash flow so that we don't touch our cash. And typically we're running $30 to $40 million of total capital per year into the 3 mines.
And then what's your outlook on silver, and would you expect the gold to silver ratio narrow over time?
Well, we're clearly bullish on the price of silver. The whole commodity complex basically had a double bottom actually. 2015 was an initial bottom, and 2018 was a double bottom for the precious metals. And we've been slowly but surely making headway. Of course, last year there was a big gap forward. Silver doubled in price last year. Gold was up, I can't remember, almost 30%. So it was a big year last year. We're still in the consolidation mode, consolidating those gains here early in 2021. But my short-term outlook is that we'll probably retest last year's high by year end and break into new highs next year as we continue into the rest of this cycle. That's on the metal price side. On the ratio, the gold-silver ratio side, clearly history predicts that silver outperforms gold in every bull market. So since we're still hovering around that kind of 80 ratio, and the historic lows, well, gosh, throughout most of the last 20 years, the ratio averaged around 55 or 60. It got to a low of 31 in 2011, and it got to a low of 16 in the 1970s. So I think there's clearly great progress to be made in the ratio as we move into the rest of this bull market.
And the next question is, what was behind the decision to sell El Cubo versus bringing the mine back into production?
So it was a tough one, but we really ran out of reserves, and it's a decent-sized operation. It's a 1,500-ton plant, which we built in 2012-13, and we ran out of reserves to feed the plant. There's still some small blocks remaining, and the purchaser of that asset thinks they can do some batch mining and milling and bring it back on at 200 or 300 tons per day, but that's not an Endeavour operation. So we felt we were smarter to take the money and move on to bigger and better things like Terronera and Corral.
And the next question is, do you expect to remain a pure play silver producer, or would you, like many of your peers, start to migrate into other precious metals, namely gold?
So actually, the context of that question is that virtually every single one of our silver peers has had to go to gold because there's just nothing to buy in silver. And our motto in Endeavour is, if you can't buy it, you have to find it. And we're the finder in the entire group. We found all the ore bodies we're mining at Guanacevi, all the ore bodies we're mining at Bolanitos, all the ore bodies we're mining at Compas. And now when you look at our development pipeline, we're the only company in the group to have new discoveries in the pipeline to build into new mines. Terronera, once it's up and running, will actually double our production at half our costs. So we are the explorer in the group. And so we're obviously relying on that to maintain our silver-rich exposure. Depending on acquisitions, we may go pick up a gold-silver acquisition, dominant gold, a little bit of silver or silver-copper, and it'll skew it back more towards 50-50. But we like our silver-rich nature, and again, producing only silver and gold. I think we're the only silver producer without any base metal credits. So for that reason, we have the highest left of the silver price, and we like that.
And the last question is how would you prioritize your capital allocation goals?
Well, clearly this is a year of raising capital for Terronera. We had published a $100 million capex last year. That may drift higher as we adopt more capital projects to reduce our operating costs at Terronera. But nonetheless, our thinking is that we'll raise $60 or $70 million of debt, and the balance will come out of our cash flow, or if we need to, an equity offering. But we don't need to deal with that now. and the focus is on basically raising the capital to put Tenera into construction this year.
Also, I wanted to kind of throw in, could you comment on the opportunities to continue to expand your mineral resource and reserves, particularly at Guanacevi and Bolanitos?
Well, we've been very fortunate at both mines to be able to acquire adjacent lands and then drill basically veins that had never been drilled. So the three ore bodies that we're mining at Guanacevi right now, Milache, El Curso, and Santa Cruz Sur, these were basically land acquisitions in recent years that had never been drilled. And so we're living off of those for the next several years, and there's even more lands in Guanacevi that we'd like to get our hands on. So it's a process. And we've been doing this process now since 2004. So 16 years and still going strong. Amazing. Similar story at Bolanitos. We have to work a little bit harder because there's more landowners in Bolanitos, and they tend to want more for their lands, but nonetheless, there's lands adjacent to Bolanitos that we think are very attractive, and we continue to drill portions of our own properties that have never been drilled and make new discoveries. So that's how we do it.
Thank you, Brad. I think that's about all the time we have. Thank you for joining us.
My pleasure. Thank you, Mark.